Hey everyone, it's Minasuma here. Today is 22nd of June 2025, and I would like to do something differently than I have done in the past. We're going to analyze briefly the Fear and Greed Index. We're going to watch what's the performance of the different sector this week, but we're not going to analyze the indexes or the seven magnificent stocks. The reason is because we are in a pretty much similar situation as last week without no major importance to share. And instead, I would like to share and to give you a guidance. How do I analyze a stock completely from scratch, from start to finish? This is not meant to be a recommendation of buy or selling, but rather an educational video. Every person has different methodology, and it's not my duty to tell you what to do. I don't take news into account because news are a consequence. What leaks my decisions are based on price, and the price dictates everything. The price is moved by buyers and sellers. I hope you like, you subscribe, and more importantly, that you learn. Starting with the Fear and Greed Index, we can see that this week we have at a neutral position. The events that happen across this weekend are not reflected within this indicator. Probably on Monday, this chart will look slightly lower than we currently have, obviously with an increase of volatility. Specifically, looking at the week performance, we have the energy with 1.75% up. And then in terms of worst performers, we have the healthcare with a minus 3.46%, basic materials with minus 2.81%, and communication services with minus 2.46%. In the short term, we may expect volatility increase and higher energy prices. The first thing I like to analyze is how the stock has been performing over the long term. We can see that the stock started trading at a current price value of 0.19 cents, and it reached a maximum at almost 700. You pretty much multiply by so many times within the original capital. Obviously, you will not be at the beginning and you will not sell at the top. Forget about that. That's not realistic. Instead, you can take those moments where the stock is at a reasonable price, your strategy tells you to buy, and then you sell when your system tells you to sell. Another good thing I like to do is to compare the Adobe compared with the behavior of the SP 500. So we can see here on this chart that since the beginning, the SP 500 has multiplied by 23 times, while Adobe has multiplied by 19 times. If we shorten the behavior over the last 2 years, we can see that Adobe has been performing worse than they have been performing the indexes. So on the short term, will not be a stock to actually have it because it's doing worse than the indexes is doing. But if we start zooming out, we can see that the behavior of the Adobe, specifically since 2010, has been better than majority of the indexes. However, even though we are taking a period that starts from 2007 until now, we can see that Adobe has multiplied by 8.4 times. The Nasdaq has multiplied by 12 times. So even though having your money into the Nasdaq was a better decision than having it into Adobe, but the farther we go in terms of distance, the better decision it was. We're going to start looking at the behavior of the stock across the different years. So we need to start at the beginning of this period. I'm going to focus within this original period back in the 86. I'm going to put here the start point. I'm going to put here my end point, and we're going to focus in this area. It's very common that a stock has been originated very long ago. The history and the data we have is very poor because a lot of time has passed. So it's not a good period overall to look. But the first thing we can observe is that since the beginning, it's a stock that was doing good. Personally, I don't like to invest in any company that has less than 300 or 200 trading sessions or less than a year because there is not enough graphic data to tell me what to do. I just simply maintain sidelines and waiting until we have a bit more of history. But we can see that initiated with a long-term trend, at a price of 0.19 and it went all up to 0.68. Right, we have here our first, we're gonna take now this graph over here. Starting from 1987, we can see a series of consecutive Fibonacci retracement wave going up. We can initiate our first one here. We can see that our price went all the way up, almost corrected to the 50% Fibonacci retracement. We now project our Fibonacci retracement to the 50% that was previously. So that initiates a second Fibonacci retracement movement. And then the third one that has a target objective around $1.46. The price even continued going beyond that. And then we had an all-time highs at 164. Since then, we have a natural correction in two waves. We have the first one, and then we have a second one. Here, we can see an actual rectangle. What's a rectangle? Is a period of consolidation where the prices just bounce between lower levels and higher levels, but within that rectangle. We have here our first breakout. So it tried to get up, and when we had this structure, our rectangle show us that the price has an objective towards 151. But what happened instead? The price faced a rejection, it couldn't, it lost the 200 weight moving average, and then we have a correction. So that was a bearish structure, and that was a technical analysis, absolutely failed, which is important to mention that not all the figures occur, and not all of them are successful. Then we have a minimum at the levels of 0.38, and we can consider that it was a major correction, but looking backwards, it was still unreasonable since the beginning because we started trading at 0.19, and we have never seen that price before. Then we can start connecting those lines. We have a normal first waveman here, we have a second one, and we have a third one. More importantly, we can see that the first area of resistance is our 200 moving average area. You can see how this is a resistance area here as well. And then now this area became as a support. So we have this point where the prices bounce here, here, and here. And if we start connecting those minimums that we have drawn here, we can see that we can draw our first trend line where the prices will stabilize around this area and then will continue until the line is lost, which was lost very briefly. On the technical analysis, we can see here a head, a left shoulder, head, and right shoulder is minimal structure. And normally I would require that this structure takes a bit longer to be drawn within your map or within your chart. But we can calculate that if we measure the head towards the neckline and we project that from the point of breakout, then we had an objective towards 158, and that objective was achieved. Then moving forward, we can see that we have a normal correction. So first, we have a potential rectangle here. The 200 moving average became lateral. This is not good signal overall when the prices comes up, goes down, goes up. This is basically telling us as an investors that we don't have a clear signal where the trend is. More importantly, we can draw a Fibonacci retracement area connecting the minimum and the maximum, and we can see that the price tried to look for the 61.8 because the price didn't went beyond that, and it loses instead the previous minimum that was at $129. Then we can draw another second Fibonacci retracement towards the area of 105, and the price keep even going lower to 0.82. Here we have a resistance area as well, where the prices find rejection between these points. As soon as the price breaks through this point, we can see a good movement up. This, traditionally, we had a potential wedge forming with a first Fibonacci retracement and a second one. So exactly the same. We have first one, the price corrected to the 61.8%, and then we have a second one, which lead to the price to the 131. We break the 200 moving average, and the area that previously was a resistance here now becomes as a support. The price started spiking up, and it went all the way up to the 272. If you ask which areas would be an actual buy to capture this trend, the first one could be the break of this downtrend at around 0.97. That was the first entry area. Then you have the break through this area, specifically at the $114. And if you want to go one step further, you can go with the 200 moving average breaking through, which is exactly at the 122. Since then, you didn't have any other opportunity from a technical point to actually jump on the train. You have here a bit of consolidation period that you could actually, very minimal, that you could actually take it. So your entry point will be exactly here, and your stop loss will be exactly here. And because the price continue, you can just be invested. And the price keep going up, and then the normal correction. So this correction, we can draw again another trend line connecting this and this. And then we have here as well the last rejection. And then as soon as we go above this candle, specifically here, that will be our new buy entry. And we keep bought on the stock. What happened on the 24th of May? So on the 24th of May, the stock was trading at 298, and then it opened a gap, and at the open was at 200. So that gap was almost, by memory, I imagine it will be around 30%, but we can actually measure specifically how much was this downfall. And on that fall, we can see that we have a fall of 33% in a single trading session. That's why it's very important to lock in profits and also to put stop loss if those cases occur. What happens if you enter here, as we mentioned, and your stop loss was set it up here? On that day, your stop loss will be triggered. But what instead if you keep moving your stop loss to the previous minimum and then on that day open? Still, you will be selling exactly where the price opened. So unfortunately, this is one of those cases that if you have a stop loss or even a trailing stop, it will get triggered at the opening price, which is here. If you take it by percentage, so you said up to 15%, I'm going to take a profit, then you will be locking in profit. Personally, I don't set it up that. Then we had this gap that it was massive one. And usually when you see those gaps, it takes some time to get filled. So we have now a correction in the price in the days following. And we can see that usually when you have such massive gap of 33%, there is high potentiality that in the future is going to get extended. We have here another structure, which is basically a wedge triangle. And the breakout point, the British breakout point was this. We measure the minimum and the maximum, we project from the breakout point, and we can estimate that the price could reach within the next days, because remember, we are here yet, we can reach a point towards $1.65. And then the price keep trending lower and lower. But here, on the 90s, we have something very beautiful happening on the stock. We have a divergence. You see that these prices goes down, and then on the RSI indicator goes up. If our price breaks through this resistance, specifically on 137, then the divergence will be activated with this objective towards 171. And then we can see exactly the same. The price was activated. We had here objective achieved, and then the 200 moving average acting as a resistance 1, 2, 3, and almost 4 times. Once the price stabilizes and then finally convert this as an actual support area, the price continues to make an all-time highs. Also, for those who doesn't know, it's very important that the previous resistance areas now became a support. So this became a support area here and almost here. So the price did it into waves, and then we can have another triangle here, breakout, we measure, and then we reach to the objective. We are still in the 90s. Now, what happened here? So we have a period of basically laterality, where if you connect all these points, if you connect these points, we can see that we are almost in a first wave movement. And if the price goes above, we don't know if that is going to be achieved or not, but if the price goes above and breaks through this line, there is high possibilities that then we can measure the channel we've got here, project, and then goes toward that objective. This is essentially what we happen, and we have a maximum at 406, and then the price start correcting. Now, if you follow specifically the technical analysis, that will be the exit point. So that particular strategy will be triggered on that day, on the 91. So it will be unsuccessful. Another reason why not all the strategies goes along the plan. You draw your line, you connect the different points, and then you have the breakout point here, and then the confirmation. So if we extend this one slightly further, we can see that this is the confirmation. And the price had another 2 Fibonacci retracement wave. So we have our first one, our second one, and then we have the next massive movement up with a support on the 200 moving average. This one can be connected as an actual cap and handle. So this is the cap and this is the handle, which have an objective, again, very ambitious objective, but we will see if it ended up get activated and achieved over time. So in this particular case, the objective was activated on exactly here on the 14th of September 1994, and the objective was towards $6. Remember that we have a massive gap a few years ago here, and that took a long time until it was closed. That was in 90, and until 91 it didn't close that gap. Here we have a similar situation. We have a massive gap on the opening where the price just simply jump from one price to another. Usually that leads into another continuation until the trend stops. How we can measure how long could the trend move? So if we connect a line across these areas, we can see that if the price loses the trend line, specifically here, we will exit our trade because there is risk of further fall, which is essentially what happened here. But exactly as before, we have a divergence, minimal here, but we do have a divergence. So prices goes down, indicators prices goes up. If it breaks through the previous minimum or the previous maximum, apologies, which is here, then we can take this divergence as an actual trading opportunity. So we measure and we can say that our price has an objective towards 774. And it continued even further all the way to up to $9. Price correct after the objective was achieved, and then the same. First resistance, first support area 200 moving average, second and the third one. And this is an important factor what we're going to see here. After those areas was achieved, we have a massive gap here. So from a technical analysis, if this area acted as a resistance 3 times, the more times you usually try to use this area as a resistance, there is high likely or high chances that you are going to break it over time. And with this gap, it just only confirmed that potentially in the future the trend can be lower. We don't know yet, but based on previous data, we can see that this massive gap, it takes a long time until it closes. And then we can see here a period of almost laterality where the stock doesn't fluctuate, goes up and down. You can see here that the 200 moving average, again, resistance, support, support, and the price pretty much stays within the same levels. So if we start taking, further, we can see that almost this, start connecting this like this, and this like this. There is high chances that this is an area. It's not like if you lose specifically the line then exit. You need to give a bit of bounding because these are zones or areas where the price might be rejected. So in these areas, these are support areas where the price tend to bounce back, and these are resistance areas where the price tend to find a resistance and then go lower. But here specifically, you lose the 200 moving average and then you lose this section over here. You remember this massive gap? Not only hasn't been closed since then, because in order to close, you will need to reach this price over here. But more importantly, it just keeps trending lower, specifically at the distance of this channel. So we project an objective towards the breakout point, and we can estimate that our target was 333, all the way from $90. Exactly the same, another 60% correction movement, which is a good advice for everyone joining. Companies can have massive drawdowns before they go to new all-time highs. That's why you need to manage risk and you need to manage your positions accordingly. And here we have essentially the same situation as before, beautiful divergence. RSI, it breaks above, and then we can take this as an objective towards 3.95. Support, support, and that was the last moment basically that you can actually enter. So here, or if you take the all-time highs and you enter here, then you just keep invested. Look what a beautiful pullback to the 200 moving average. This can be considered as an actual wedge. We can draw this one, we can measure, and we have a target objective to $20. We were a few years ago talking about the two $7 and $9. Now we are about $20. So we already multiplied by almost 3 times. And the stock, if we start drawing, exactly the same as before. This is our trend line. As soon as the trend line get lost, specifically in the year 2000, situation might worsen. So we went a beautiful trend from $5 all the way to 43. And how we know that this trend might end? Well, the first indicator we have here on a massive level is that the prices goes up. You can see here a maximum and then another maximum. And instead, the indicator does the opposite, a minimum and a minimum. We know that if we lose the minimum between those maximums, which is exactly here, then a divergence can be activated, and then we can take this top and this minimum as the measurement for our divergence, with a minimum objective to $18, all the way for 43. Not only the objective was achieved, but even ended up going lower. And the prices tend to stabilize around the area here with a minimum, with basically a double bottom, very minimal, 2 prices within the same area, and then the price start bouncing back. First area of resistance, 200 moving average, and the price keep going lower, a lower here. As soon as you lose this support area, there is high chances that you might continue going lower, and this is essentially what happened here. Good gap, and another gap. Now, here we have something not well seen, but it's another divergence. Prices goes lower, while if we measure here, they look almost parallel. There are different types of divergences, and this is one of them. We can see that the trend is finalizing, or the bearish trend is finalizing, all the way to $8. And if we zoom out, don't we had this area that was previously an all-time high is now acting as a support. Look how beautiful it is. Here in 95 was a all-time highs, and now in 2002, 7 years later, is acting as an actual support area. So there is a high chances that buyers are going to be buying within this area. We have the breakout point here. We have a triangle. We measure, and then we take. And this is our target. It was achieved. We have a left shoulder, right head, and right shoulder with a fake breakout. We measure the head to the neckline, and it was achieved. Some people like to do downtrend channel. I don't see personally downtrend channel. I see more like a inverse head and shoulders, even though the patterns can be quite similar. Then you have essentially the same here. Another continuation pattern. These are beautiful patterns because if you tend to occur very close to the 200 moving average, and if you break above and with this beautiful gap, there is high chances that the pattern will end up going in your favor. And this is another example that was achieved as well. So in the 2 and 4, if you take the position at $19, you will exit at 23 with another profit. Then here we have a bearish structure that was never completed. So we had 3 prices within the same area, almost like a head and shoulders, very minimal. And if we lose the 200 moving average, then we can calculate, and the previous minimum, which was here, we can calculate the extension of the rectangle with a minimum objective towards 18. That was never achieved, and instead the price went to a new all-time highs, passing through the previous one. This is the moment where we can take this area as invalidated. So this is not right, it's actually failure. And then we keep going up. Spoiler, I personally don't like to short any company that over the long term has beautiful, strong bullish signals, and instead I just don't take any shorting position on those kind of companies. Then you can see breaking the all-time highs, and what usually happens after breaking the all-time highs is that we're going to face another period of prosperity. So we measure, we project, and we have a target objective towards 27, and then we have here again a rectangle. In this case, the objective was achieved. So we have a minimum objective that was achieved on that day. And then the price stabilizes 200 moving average, no direction. And then we start going up finally in 2005. Trend line, breakout point, we enter here. We put our stop loss right below. So here we have a target objective towards $38. And then we make another all-time highs around the 40 area. Remember that a few years ago, we had another all-time highs at 43, and we are close to that area, which is essentially here. It's very important after all this period that if you go to all-time highs, there is high chances that if you break through the all-time highs period, and if you go beyond that, there is a high prosperity period. However, if you're not able to overpass clearly within this area, you can enter into a correction phase. So let's see what happened. We break through briefly, and this is the first indicator here. So we can see that we have a bearish structure. We lose the 200 moving average. We have a connection here. Left shoulder, head, right shoulder, break, continuation, and then finalizing with a divergence. Price is going down, price is going up on the divergence. And we make a bottom in 2008 in March. Then we tend to go up, measure, project, and we have an objective price towards 41. Objective achieved, and then prices continuation here, channel. I'm drawing those lines anyway quite fastly. On a normal daily basis, you want to be very meticulous. Every cent is important, so you want to measure them as good as possible and as clear as possible. And then your entry point here, your exit point here. And what we have here is this candle tells a lot of information. A lot of buyers that day couldn't go through the resistance, which is the 200 moving average. Now this area is very ugly. I personally don't look at candles in individualistic point of view, but this one gives me a lot of information. So we have very small double top here. This candle says that here is going to be a rejection area and it's going to be difficult to overcome. And that area is essentially on the 45. We close below, remember, the previous all-time highs. So based on that, there is high chances that we are not going to go to all-time highs, but going instead lower. And unfortunately here we have just simply the confirmation. So the price cannot hold it, and then it completely needs to go on the opposite direction. So on a non-normal technical analysis, if you're invested here, you take profit here. If you see a bearish objective, you start selling on the 200 moving average as soon as it changes direction in terms of you are long. And I wouldn't be here personally for two reasons: the candle and then the strong rejection you are seeing within these days. And just only price confirmed a few months later. Once we are in 2009, around March, we can see here that the situation just continues, buy, resistance, and then this area as a support. We lose the 200 moving average, we restore again, divergence, price of divergence activated and achieved. We measure, and then we have a bearish objective towards 24. Is this type of bearish objective going to be achieved? Again, I personally wouldn't be bear or short this type of company simply because the long-term momentum are strong, but evidence shows that we are closer to the projection, which was around 24. We have a minimum at 25 here, and then the price start bouncing back. But the objective finalized, it was completed here. And in order to deactivate this pattern, the price need to go beyond that, which didn't. So unfortunately, the price even correct further and so on. Here we have two minimums within the same area. Double bottom. We measure them. We project. We have an objective price towards 28, sorry, that was achieved here. And then resistant area, resistance, and then finalize. We can start going up. Normal healthy correction after all this upside movement. So we can even draw a Fibonacci retracement that lead the price towards the 38.2 area. Connection, breakthrough, buy entries. This is again completely set up on your signal. And we know from a Fibonacci retracement area that if we break beyond the all-time highs, 34.76, we have a high projections to go to another all-time highs. So as soon as we break the all-time highs, we have a projection objective towards going to be very specific. So 41. You'll see what happened at the price of 41. You have here a double top. For those who take already benefit from that movement, so you already cash out. For those who decided to keep part of the position in the stock, then they will use the previous minimum as an area of exit here, or even the 200 moving average. And the price just keep going higher and higher, breaking the previous all-time highs, left shoulder, head, right shoulder, neckline, and go up. And exactly the same as we did from the previous. So we basically have a beautiful gap that usually leads into another continuation if it's not entirely closed. And we can see here that the price was enclosed by almost a minimum. And because it was enclosed, there is high chances that the price will bounce back. And if the gap hasn't been closed, there is high chances that the price will move in the direction of the gap, which in this case is up. Right, so we have another one and another one. And then normal consolidation. After all this period of the price going up and initiating here, you can see that a normal consolidation happened. Price is initiated here, at the price of 41, we reach to a maximum of 71, correction towards the 50% Fibonacci, and if we break all-time highs, price target towards 86.48. Downtrend channel. And then beautiful normal consolidation period, acting the 200 moving average as an area of support. Here, 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 and here. So these are the type of trends that you want to capture. If you enter here in the year 2000, there is no signal that this will change, not even if you have these areas as an exit point, because none of those exit points has been triggered. So you can simply be invested. You enter at the price of 65 and you keep invested all these years, 2014, 2015, 2016, 2017. And this is when the parabolic becomes vertical, where probability is that the price will start becoming exponential. Look how many gaps we have here open. This one, they haven't even been closed. This one hasn't been closed. This one hasn't been closed. So look how many years we have continuation of the trend until the trend is lost here. We have downtrend channel, potential objective towards 300, and it was achieved. And we can be invested since 2014 at a price of 66. And essentially the same here. Triangle, objective achieved as well. You can clearly see on the chart. And then here we see the opposite, a divergence, where the prices goes up, indicator does minimum, and there is an indicator that potentially we can start facing a potential correction. So in this particular movement that initiated from 2018, we can measure this as a 1 Fibonacci retracement wave. If I measure actually properly this, we can see that the close didn't lost. It lost within the intraday with this massive volatility session in 2020, which was COVID, but it didn't lost the 50% at close. And then we can know that if we go beyond all-time highs, which is around the 400 area, then we can have another projection towards 437. And this is essentially what the price did. Just keep going up and up and up. Now, 2020 and 21, we have stabilization period, this one and this one. This is normal because the price went up all the way from 2020 to 2000, and the same year it went, or it doubled in less than basically 6 months. So there is high probabilities that the stock, after doing that rally, it need a consolidation period, completely healthy. If you connect now the previous and the maximums, you can see that the price corrected between the 38.2 and the 50% Fibonacci retracement. Once the prices bounce here, that will be the entry point, that will be the exit point. And you know that if you follow technical analysis, you can take even this as an exit point, depending how far you want to put the stop loss. If you break all-time highs above 537, then they initiate another Fibonacci retracement wave towards the 700 area. And then what we see after is completely a continuation of the pattern. Surprisingly, we just achieved essentially 700 area just a few days ago. Or, a few days ago in 2021. It still feels a few days ago. And then we have beautiful divergence here activated on price. If price is lost the previous minimum here and here, you see, there is high chances that this will be a big correction for Adobe, initiated at the price of 552 with a potential target of 410, and this is essentially what we saw. Gap here that wasn't closed, another gap, and another gap. What should I do when those moments happen? Well, if you're not shorting the stock, you just simply need to wait sidelines. These are the moments that after this moment, there is no technical perspective to be in the stock. There is nothing that tells you to stay in the stock. You just need to wait sidelines until the price stabilizes and gives you a clear direction. What's going to happen? Here we can see areas of support, entry, stop loss below the previous minimum at 274. And since then, we start trending upwards. So first resistance, first support area, second support area, third support area. We break towards the 200 moving average. Break through that. You can draw this as an actual ascending triangle or wedge. Activate the objective towards 459. And that's pretty much. And then the last moments, or the last few months we have seen in Adobe, is that we can draw this trend line. We lost the trend line on the 200 moving average with this gap, which is again bad signal. This is our resistance area, 588, and if we are not able to reach beyond that area, and if we are not able to break to all-time highs, there is high chances that we're going to be on correcting phase. That's essentially what the price is at the moment. We're on correcting phase. When should we enter? Well, there is no actually real reason from the technical perspective to enter right now. You have here divergence activated, but right now this is the resistance area, and this is our previous area of support, where it's basically the stop loss. If you like to look charts over the long term, and if you look in a monthly plan, you can draw here even a trend line. Look how many years was respected. Initiated in 2016, continued in 2018, 2020, and 2022. It was briefly lost, and after that line was lost in 2024, the whole situation of Adobe changed. Right, that's the whole analysis of the company in terms of following chartism, taking consideration RSI as areas of support and resistance. Worth mentioning that you see here, there are areas as well of oversold and overbought areas. You can see here. You can see here, it's potential buy entries. I don't use this one as an exit point, but rather as an actual continuation of the trend. And I hope you subscribe. And if you want to see more videos like this, or if you have any questions in terms of the analysis, please let me know in the comments. It has been more long than usual, but it's a very informative one. So I hope you like, as mentioned, and have a good rest of the week. See you until next time. Bye-bye. I hope that next week we are going to have better market analysis. See you. Bye-bye.